60% gains this year, the Nifty Realty Index has clearly outperformed. Real estate stocks are finally seeing that turnaround after a downturn of over 7 to 10 years. But how sustainable really is this rally? And is the exuberance in realty just limited to their stocks? Moreover, how are market experts viewing the real estate sector? Let's find out. Now, the real estate sector is one of the highest employment generators in the country just after agriculture. The sector is expected to garner about $5.8 trillion by the time 2047, this according to a Knight Frank report. However, one needs to break down the sector into two to understand the larger picture. Commercial real estate on one hand, whereas housing market, which can further be seen through the prism of luxury housing versus the affordable homes.
Most of the run-up that we are seeing in the realty segment is linked heavily to the luxury estate project launches per se, and not as much on the entire conversion cycle. So while projects are being launched, we are yet to see how well and effectively does it translate into top line and then finally bottom line, which also highlights a point on will there be money that will finally be delivered to shareholders in the form of earnings or bottom line. Per se. That is yet to be seen. It is slightly skeptical at this point in time.
One might take a cautious approach, but individual stock performances paint quite a different picture. Marquee listed players are finally seeing their balance sheets improve, which is then reflecting in their stock performances. Prestige Estates has seen a hefty gain of about 134% on a YTD basis. DLF is up about 70%, whereas Shobha and Macrotech developers have seen gains of nearly 60% each.
The most important fact to remember here is the balance sheets have also improved because real estate is a balance sheet and a cash flow business, right? Second, you've also seen affordability of the end buyer has gone up in the last 7-8 years because the income growth has been reasonably okay, whereas the property prices for a large part of the last decade in the metros have struggled, right? So we see more steam still. We are just in the second year of an upturn. So we are, continuing to maintain our bullish stance on real estate.
And if one is to believe that we have peaked the interest rate hike cycle, this could only spell good news for an EMI-dependent population. And getting into an election year, one could only hope that affordable housing would become a priority for most political parties. But not everyone seems convinced. The fear of black money re-entering the space still looms large.
The sort of surge we've had in real estate prices are reminiscent of 2014, 2015. And as many of us know, that was an era where the color of money in India was quite funny. Cash in circulation as a percentage of GDP is now significantly above the levels it was at demonetization. The velocity of cash is low, and that's easy to see because all of us have crisp banknotes in our wallets. Right? So money is moving less, but the amount of cash in circulation is more. And that seems to suggest that people are once again using cash as a store of value rather than a medium of payment. The medium of payment is UPI, but the cash as a store of value is back. And again, we are getting news that the black component in real estate is becoming higher.
So though the real estate index is promising outstanding returns, there may be limited room for a re-rating in the stocks. But for now, market experts continue to keep a cautiously optimistic view on the real estate sector.